Okay, guys, today we're going to be wrapping up the interview. So you're going to get a Google form that's going to do the last 7 questions of the interview. Again, don't rush them. Make sure they're thoughtful and smooth and prepared. Now, the fourth and final part of the final project is going to be technical analysis. So I did want to check in to this spreadsheet that we created at the beginning of the year. Okay, now if you can take a look at when we started the course on the 28th of January, and we added some positions and we started to build the spreadsheet, you can see that we've taken it, in most cases, all our investments are down. So from when we started the course, the S&P 500 is down a little over 10%, Dow Jones down 15%, and the NASDAQ is actually higher. Okay, the NASDAQ, the QQQs, is driven because of the way it's structured by its 4 or 5 biggest investments, and that would be Amazon, Apple, Google, Netflix, I think even Facebook, and those are all higher. Okay, as the economy shifted and we rely on their technologies for our day-to-day stuff, their prices have just bucked the trend of the rest of the market. Semiconductors, you can see, very important, but energies got crushed. Oil. If you look in the skies, you can see that airline traffic is down. You look on the roads, you see that regular traffic is down. So oil prices got crushed, gasoline prices have gotten crushed, and a lot of the stocks and the producers are down. Utilities are down, financials are down. A couple things here, healthcare. Okay. So a lot of people are using and consuming healthcare right now, so they're going to see the revenues in the future. Uh, Solar is higher, and I think that's a global trend more than anything else. But it's kind of interesting to see that we've hit some dark times, but not all investment areas are down equally. So it's why it's good to diversify your portfolio and have money in different areas of the economy, which some might be more resilient than others. Real estate, I'm going to say commercial real estate, could be in a lot of trouble in the future, depending on what happens. There were some green shoots the other day that the market responded to. Um, One of the things that I'm always nervous about investing in are things like biotech and pharmaceuticals. They're very hit or miss. But one company, Moderna, had a very positive stage 1 trial for a vaccine. The market reacted hugely to it, realized that the sample size was only about 45 people. So, although it was very promising, we'll go to stage 2 next, which is maybe 500-600 people in a clinical trial, but we're still a long time away from a working vaccine. So in those areas, individual companies can skyrocket or shoot down. It's a little too risky for me, so I like the ETFs. I'll list those later if anyone's interested in following them. Now, the last part of this is um, an elevator pitch. So I'm going to talk more about the structure of what an elevator pitch should be. But you have you walk onto the elevator and your boss is there. Okay, and you want to hit him with an idea. You've got about 30 seconds to get his attention, his or her attention, and we want to be armed with some data on whether investment is good or whether investment is bad. So I'm not saying we have to find things that we have to buy. We could also look at a chart and say, "Oh, boss, we've got to sell this." But the idea is we're going to use basic technical analysis, which was slope of a line. We did this earlier in the year when we took a look at SPY. So we had a long-term support trend line. We found a low back in February 8th, 2016. We found another low in March 27th of 2019. We figured out the change in price or the rise over the run, and we programmed this in to just take the difference between these two values. Change in time was the difference between these two dates, so this many days. Now, change divided by rise divided by run gives you the slope, and the S&P 500's long-term trend was going up by 7 cents per day. So if we have today's date and we know how many days since the last recorded low, you can multiply that times the slope and get what the change in price should have been. So if you can see in this formula here that this is basically, the trend line price is taking the new change and adding it to the last known price. So G5 plus C5, okay, will give you the trend line price. Now here's today's price, which is actually below that. So you can see that we've broken the trend line. That long-term trend line that we established in the early days of the course was broken when coronavirus outbreak happened. Now we cratered and rallied back, but we're still below the trend line. So this trend line is kind of useless, but this spreadsheet isn't. Okay, so I'm actually going to create a new one, which will look very similar, but I'm going to be typing in different information for something that I think is a trend in the future. So I'm going to take an ETF. Okay. An ETF called BOTZ. All right, BOTZ is BOTZ. All right, and currently it's at 21.95. Now, this is the 5-year picture. So you can see it. The ETF started in September 12th of 2016. It shot straight up on potential because robotics, artificial intelligence, that was a buzzword at the time. No one knows exactly the limits of what could be achieved there. And you can see it was off to the races, hit an all-time high of 2647. Okay, and then it settled back to reality when they realized these companies are burning through a lot of cash. It's very expensive to develop this technology, and right now they're not seeing the return. So it started to sell off until it hit a bottom of December 1st, 2018. We hit $16.74. That was a low. We bounced around. We saw another low back here at $18.14 on March 1st of 2020. Okay, so I'm going to use those 2 points for my long-term trend support when I come back and input my data. Now, so I'm going to change this ticker symbol, BOTZ. The date of the lowest price, the first low price was that. Okay, and then we saw the low on, I think the low is actually on the 23rd, but the chart I'm looking at is smoothing out a lot of the data. So on December 1st, it was 1674. Okay, on the 1st, it has $18.14. Now we're building a model, and all models are wrong, but some models are more useful. So we're going to draw this line with a crayon, not a pencil, but it's going to give me an idea on what ballpark I need to be in to get close to the trend line and give me a nice safe buy. So here you can see that the change in price was only $1.40, and we have like 2 years between, or over a year between them. So 456 days, you're going up by less than half a cent per day. Okay, so that's a nice slow moving trend line right now. You can see today's date is the 20th, and the days since the last known low was 80. Okay, so if you multiply the number of days times the slope, you get a change of 24 cents. So if you add that, this 24 cents to the last known price, you're going to get the trend line price. You can see that we're currently trading well above that amount. I'm sorry, let me update the all-time high, which was 26.47. We've rallied well off the lows from March. So Today's price is at 21, so you have $3.56 of risk. But to get back to the all-time high, you've got a reward of $4.52. So I would look to play this if the market sells off, and so does this ETF, and we get closer to this trend line price. I would be more apt to buy it, as this skews as every dollar of risk goes back towards reward. Now, I would take this a little bit further, and I'm going to show you something in a later video where this is actually kind of stuck in what's forming a channel. So a channel is you have a long-term trend line support, but you have a parallel resistance line above. It looks like bots ran into its resistance line, and I'll have to discuss that in a later unit. But I wanted you guys to be able to put together or rework one of these spreadsheets that we did earlier in the year to fit a new ETF. So I will post lists of different ETFs and what categories they're in, but you could also use the spreadsheet that we were working on in the beginning of the year. Okay, I know that's a little bit loose for right now, but I want you to start thinking about or going through ETFs, looking at their charts to see if you can see any patterns. They could be an uptrend, they could be a downtrend, and we want to predict or calculate the trend and see what's a safer buy, what's a riskier buy. Right now, I want to own this because it's in an up channel, but I don't want to aggressively buy it at this price. As we get closer to this price, I want to own it and I want to aggressively acquire more. Okay, guys, that's enough for today. So we're going to be doing finish up your interview work, but let's start gearing up for the last phase of the final project.